As a reminder, none of what I say is financial advice. Strictly for entertainment purposes only. There's a bunch of new links below. And when I say new, I mean that they have new bonuses. So that includes Bybit, that includes Femex, that includes Woo and SyncQuote. So you have your pick between KYC and non-KYC. So you have to use obviously what's available to you. If you're in the United States, you know, you're kind of screwed, but it is what it is. There's a lot of people that watch that aren't. All right, what's going on, guys? How's everybody doing? It's a new year. It's the first week of the new year. So big picture for BTC, we'll just start here. Like I said, prices are flat from where I left. Now, where I left doesn't mean shit, but we're still in a range. Going all the way back to 1st of December, I'm talking about last month's high. So December high, that's right around 45K, pretty significant number. You know, I would say it's a sort of key psychological level, big round number. We're still in that range, okay? What I do think is important. So I'm just gonna go over some things that I think are important for BTC. And we're gonna kind of war game this both ways, because after everything I say about flows, the things that I think are worthwhile or worth paying attention to, we're trading right now a week away from a major event. And all of this, honestly, like reading the tea leaves before a major event, it's a coin flip. It really is a coin flip at this point. And I don't want to say anything too firm because, you know, as the saying goes, strong opinions loosely held. I think that loosely held part right now is the more operative portion of the phrase. So the interesting thing is price is in a range, but across the board, whether you're looking at Binance, whether you're looking at Coinbase, one thing I will say that the bulls have going for them, because we'll play both sides. And I guess before I get into kind of hashing it out on both sides, right? Because then it just sounds like, you know, you're wishy-washy and you don't, you know, you're not coming to a decision. To be as transparent as possible, I am out of all of my alts with the exception of Flip, okay, which is underwater, Woo, which is not underwater, and a little bit of Solana left, but for the most part, it's negligible. So I sold the bulk of my Solana positioning, as I said, right when we struck New Year's, right, 3 minutes after, I was getting out of my position as much as I could by limit, and then finally marketed the rest out. So 3 minutes out, I was done, okay? As I was saying, I am going to be as close to delta neutral going into this week, or throughout the duration of this week, until we have the ETF outcome. So what that means is my spot, so I was long from vacation, I shared that long setup after this major liquidation. That was just a very reflexive trade to take advantage of what occurs in market microstructure post a big wipe like this, which is one side just gets completely vacant and there's a vacuum in the book. So it doesn't take really any effort for the market to recover this level. It doesn't really mean anything directionally. It's almost a given that when you have a massive liquidation like this, takes out key levels in market structure, kind of cuts through the book like, you know, a hot knife through butter, that the market's going to snap back if there's no continuation through the level. So you'll start to see a little bit of volume have a big impact, and that's your cue that there's really nothing in the way of price, and it's just going to fill out that inefficiency. So long from that, was long into it until today, closed that out actually an hour before the stream, and I'm going to start getting as flat as possible. I will be upfront with my options positioning as well, which will leave me with some delta exposure. I do have some essentially a risk reversal play on BTC. So I sold 50K strike calls for January 12th, and then I actually bought puts 35K, I think 36K out of the money puts just in case there's some kind of massive tail event. So sold upside, bought downside. So some exposure there, not a ton of exposure. And then when it comes to ETH, I am long a call spread. So for January 26th expiration, I am long the 2400 strike calls and I sold the 3K calls, right? So January 26th. And that's it. Other than that, I'm riding pretty flat into the event. And I think that's a reasonable thing to do because again, it could go either way. We could have a massive upset. I don't think that you would be able to sell that fast enough. And I also don't want to be outright short, right? Even though I think that there are a lot of things that do kind of personally bother me and things from experience that I think are, you know, have a high probability of occurring. That being that this event has been well known. We've been trading into it for a long time. The market is clearly long into it, regardless of what's happened recently. Almost always the case that you buy the rumor, sell the news. Okay, this is something that is for news traders in the short term. I think you get a spike up. I think we sell off, we consolidate at a minimum for a couple months. And then I think long term, yes, this is a great thing, but I don't think it's something that happens fast. But a couple things to point out across the board. One thing that's taken place across all venues is we have traded back above, even though we're back in this range. So we're in this range, right? We are trading back above the high volume node across the board on every venue. So what that means is prior to this markup, when you're trading from, you know, from looking at this from left to right and price is favoring the downside and most of the volume has taken place towards, in this case, it was right around 43.9, the POC. When you're trading below that, a decent case to be made for bears being in control. right? Most of the volume coming in there. If you just took it half and half, right? You imagine that most of the volume came in, anyone who sold is in better position than anyone who bought, right? Buyers from that level, if you consider just the high volume node, clearly underwater. And if you have that and you have, no major change in positioning and open interest, nothing taking place yet, you could make a case for people actually holding underwater positions and us not really seeing the extent of a spill, and that volume and risk that was put on that is sitting above you potentially being something that could still come down the pipe and cause bigger issues. So the best thing that could happen actually ended up happening. We're trading back above that level. We reclaimed it, and it doesn't necessarily look like that is all soak now. So if you had all that volume coming up here, and you have absorption up here and prices trading lower, it looks like that was soak. You're seeing soak on and off though, right? So there is some passive selling that's taking place for decent size, or at least it looks like there's some kind of limit chasing or passive selling taking place for decent size. And I'll get into that and why that could be significant, but why that's also possibly just reading the tea leaves a little too much or giving too much credence to something that doesn't necessarily matter because it's just someone who's big who wants to get out of the market before the ETF. It doesn't necessarily have to have any bearing on the, short-term, intermediate term, or long-term trend. So I don't want to talk about these things too much like they're that important, but again, they are things that do stand out. So as I said, we're above 43.9, great across the board, reclaim the high volume node in this range. That's good. I think that if you're trading above 44.5, then you're just going to see this attack these highs again. So pretty simple, a very cleanly defined range. There's your deviation. And if we're back above 44.5, I just think that it's more likely that we're going to attack this high again. Short-term trade, right? That can happen before the ETF. I would say that would probably happen before the ETF. Unless the market completely marked down now, I think that post ETF, initially after the announcement, you're going to get a spike either way. But like I said, if we look at a little bit more granular order flow stuff, and this is, things that everyone uses now, CVDs, and I've just isolated for, we're looking at Bitfinex and Coinbase, right? So Bitfinex and Coinbase, you could see that although price has been trading sideways, CVDs have been up only, and they've been up only to, I think this is around the tune of 150 million at this point. So from that first period, 260, 130. So we're looking at 130 million roughly. And to isolate that, the high level here, price relatively flat, basically almost flat, right? For all intents and purposes, price has been flat. Those CVDs have been up only. So that means there's a buyer. But what that means is for $160 million worth of BTC, or 130, whatever it is, just say 100 if you want, that there's been no price impact to the upside. Okay, so what it means is the heavier hand is in the offer. Either one seller, multiple sellers, whatever, has been able to stifle any kind of market movement upward based on that buying. And what you could do is you could kind of just try to create standards for, again, you can't say that this is something that applies in all conditions because it's context dependent. You have to consider how the derivatives market has been trading too. If you have the derivatives market trading with the spot market, you don't want to fade that, whether it's to the upside or the downside. In this case, we have the derivatives market selling flat, and we have what looks like pretty sticky spot wall in the ask, right, in the offer, and price is flat, but there's a good amount of buying. What you could do is you could just start looking at prior periods where there was similar amount of buying and seeing what kind of market impact there was. And what you'll find is if you look at, periods where there was 100 million market bought over, say a week or a period of days, whatever it is, that there has been generally much more market impact. And that was lower in prices, right? So what we're seeing is now up here, and again, it's lining up chronologically, right, with the time of a major catalyst. It just looks like someone's getting out and they're doing a decent job. Right. It also implies though, but someone's buying, right? There's a bunch of buyers that are getting in. And it could just be, if you really want to be dumb, you could say maybe this is just one person TWAPing into one person selling. But either way, all we see is a bunch of buying, not a whole lot being rewarded for that. And again, prior, similar activity, more of a markup. So it's a matter of, I always talk about this. It's a matter of, the amount of work or effort that's coming in and the results, right? Having a lot of effort come in, you're not being able to move the weights. Okay. So if you had, let's say, if you saw just shits and giggles, someone buys 100,000 worth of BTC for the past 6 months, every time that happens, price marks up, whatever, 5 basis points. Okay. And then suddenly someone buys $1 million worth of BTC and price marks up 2 basis points. And you got to think, what the fuck's going on? Someone is obviously selling for that to not move price at all. And that was just a very quick example, but you could create a ton of analogies for this case. More work, less results. So again, stickier to the upside. Someone's absorbing, whether it's multiple entities, it's one entity, it doesn't matter. One thing to point out, you've had a good amount of futures selling, you've had a good amount of spot buying as well. Up here until recently, basis, if we look at quarterlies, was like blown out. There's a period where basis was, when we're looking at quarterlies, annualized basis trading over 20%, while prices were for that period. So if we look on the right, this is your annualized basis. This is that range going back to, we'll just go back to December 6th, right? For this December high. I mean, here it is, okay? That's where it is. Annualized basis, 10%. Got all the way up to 20%, 22% on Binance, while prices remain flat. So people were buying quarterlies, which is, has its benefits versus perps. You're paying a premium, so you're buying something higher. You're rolling, so you're selling high, buying higher again. But, you don't have to worry about that faster interval funding rate because everyone's trading the perps, right? And it comes with that interest rate component. So when this gets really high, it's compelling to sell because you could lock in a really incredible carry trade, basis trade. You're selling futures, buying spot. Arguably they should always converge over time. You have the risk of, there is basis risk, but it is a relatively risk-free trade. And it is 20% annualized. I mean, it's at some point it becomes more compelling to sell when you add in certain other things. Again, based on context, we're leading into a major event. The market has been really euphoric the last couple weeks. There has been plenty of top signs. You have your celebrities now too. Not to say this is a top, but it is definitely what you would expect towards the top. Family members asking, we have a major event that the market has been buying up to, leading into. There's a lot of things that would compel someone to take advantage of that relatively risk-free trade. And it's usually not attractive because there's a higher opportunity cost, right? Why would you want to take that trade and short futures and buy spot, or just take that ARB when you could long shit coins and make multiples that? Well, at some point it becomes more attractive. So needless to say, it also just will outperform anyone doing the same in traditional markets, right? Any similar carry trade setup, which you won't have something like that. But as a reminder, right, talking about all this, these little details, we're going into an ETF where anything can happen, right? So I don't want to really read the tea leaves too much. I will just say that, short-term flows matter, long-term fundamentals matter. So long-term, looking at the ETF, you have to remember that Wall Street doesn't buy, they sell. So BlackRock is going to be trying to sell the shit out of this thing. Every advisor, every small-time money manager, what have you, is going to be going to their clients trying to push modest allocation. They're going to want to make this thing a success. So I think over the long run, applying that consideration to a market that is very young, that has a low float, that still has a very skeptical base of people, right, that are not allocated, of no interest. I think if BlackRock is pushing it down their throats, we'll see their tunes change. And I think that passive bid is just what's required in this market to help it closer to linearly over time and have that sort of positive drift that you would expect for something that's new. And I will just say also that to remember that once something is added to a portfolio, so once they add 1% allocation, yeah, they'll rebalance if it outperforms, but it's never going to go back to zero. So if you have a portfolio manager and part of that portfolio construction is to have 0.5% BTC or 1% exposure to BTC ETF, that's never going to come off. Okay. It's never going to be the case where they're suddenly like, okay, we're taking that out, unless you're talking about a completely different portfolio strategy or you have different risk profiles between investors, and portfolio managers will account for that. And without getting into too much, my point is that for the most part, for who it's added, it will not be taken off. So that's BTC. For me, what I expect is in the short term, if we're able to trade back above 44,500, kind of almost where we are at right now, but I think 44,500 remains kind of the level that I'm looking at. I think that you could expect to target at least last month's high. So you have a $500 move ahead of you, if not, getting overthrow to what ultimately is the yearly highs so far, just under 46. Now, I don't see us selling off before the ETF, so I think this thing can continue to chop around sideways or grind up into it. But I do think, like I said, spike up on news. I expect us to sell and consolidate for a period after. Honestly, levels that I would really want to get involved in would be anywhere back down here in this gap. So anywhere close to 40. So between 40 and we'll say, 38, I think is a good buying opportunity. I can't see a situation where the market returns to those levels and either bases out and shows absorption or returns there violently and doesn't offer a good buying opportunity. The violent return back to there is honestly better, similar to why this was a good buy. And that's because you're paid right away. You got to take your medicine, hit the buy button, but you're paid right away. So it's almost like if you turned your head, you're in profit already, and you're substantially away from price if you bought this liquidation cascade, substantially away from your entry. The worst thing is if post ETF, we just chop down, right? We have like a pop up and then chop down. The problem with that is markets hate uncertainty, right? So you're a buyer and you're sitting underwater already. The market knows, not that I hate to anthropomorphize it, it's understood that people panic lower, that as the market grinds down, that there is sort of a psychological knee-jerk reaction to that kind of behavior, that choppy behavior, where all it takes is, someone continually pushing against the book to create, again, further moves down, get that momentum ignition going, and to perpetuate that, to keep that going, okay? So the worst thing that happened would be for prices to slowly grind down. I went into this in more detail, share it on Thread. I'm not really doing justice to my explanation. The worst thing would be for prices to grind down. You buy, it looks like the dip, and then you're underwater, and you're rethinking this over and over again. So in that case, if we started grinding, you would want to see some substantial market structure printed. See us base out, on microstructure, and I hate to say microstructure, but micro market structure, and not market structure like the order book level, although you would be paying attention to absorption and signs that would show up there. But price begin to build a base. So the best condition is when you get a big spill and you have that once in a few weeks buying opportunity when you just have to kind of suck it up. But worst case, after ETF spike up, grind down. Again, short-term trade though to the upside, 44,500 looks opportune. I don't see a situation where we have another setup like this before the ETF. It's the final week. So this stream is actually not that useful because there's not a whole lot you could say with certainty about plans because they're going to be changing very soon. Again though, below 40K, I think a return there. We haven't really revisited the extreme on the other side of this range. I think you would be at least prompted with the same opportunity you were at the high of this level. So something like 40K being swiped, right? Price basing out, and you see hopefully signs of absorption there, sellers getting off sides, yada, yada, yada. And you'd have at least a play, I think, back to mid-range or back to that 42,500 level. Who knows if we get that though? I don't want to talk too firmly about any price levels right now with BTC because it makes no sense to. It might as well just be the case that you react rather than try to predict. As far as, let's just look at the options market real quick. I would not be at this point, honestly. So calls getting paid, right? Even though this range has been, we're in a range, you can see that implied volatility has continued to trend up. So even though we do see this stretch, so between implied volatility, looking at short term, it's all short term, right? 30-day, 7-day. Even though we're sitting above realized volatility, I definitely wouldn't be selling any volatility right now. I would not be saying that volatility is rich or expensive. I would not be selling this. I don't think this market or markets really price in catalysts completely, right? So any kind of event like this, there's massive jump risk. And for that reason, also, I'd be really careful for anyone who's shorting or hedging on exchanges. I would still have a stop. You might think your liquidation is very far away. I would definitely want to be at the computer all week. There is a possibility that the book's just empty, right? Book's just empty and you see massive wicks on exchanges, and just be careful. That's all I'll say. Make sure that your stop is not set to last price. Make sure it is not set to last price. Otherwise you could benefit from that, obviously, if you're trying to get in positions, but you don't want to get blown out on possibly maybe one of the best catalysts, right? At the beginning. Although I hate to say it's the beginning because that's one of the reasons why I'm getting worried, because everyone keeps talking about how it's the beginning when it's clearly not. All right, so things I'm looking at, Solana, as I said, say TIA. When it comes to Solana, I can see this being a top for a long time. Right. I could say, again, like I said, this stream is we're going to know a lot after this week, right? Because I think that Bitcoin is going to dictate, and ETH is going to dictate how this market feels moving forward. If things really just begin to shit the bed, I don't think you're going to see alts outperform. So it's path dependent. Okay. So Solana, I mean, it hit 126. I think this is looking at a much deeper pullback, honestly. So I personally, though, I'm not saying Solana is dead. I'm not saying any of that. But I do think from a risk reward standpoint, this is not the best area to start scaling in. I think I would want to start looking at Solana down around and under 80. For most alts, if we're going to see large corrections in alts, if it hasn't corrected 80% yet or 90% yet, I'm not even going to bother. For things like this, we're 27% off the highs. I don't see a reason why this won't come down even further, even though, again, regardless of what everyone's opinion is on, Solana fundamentally, where its places in crypto, blah, 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 blah. This was a very crowded trade, and I think there's a good amount that's still left to come off. If this comes down and trades around 80, I mean, if we look at this from a derivative standpoint, it's not like just go to Solana, and if you look at it on Velo, it doesn't have the extent of exchanges, but there was a very significant wipe in open interest. It takes us back down to levels that we were at in open interest when we were down around 80. So that's good, right? You see a lot of air taken out of that. I mean, it's not complete though, right? I don't think that that's it. I think that this chops around. I would like to see it. Our, best case scenario, this chops around 80, and we see, and this goes all the way back to, March 22 lows, which I don't think are significant levels now, but it's a level that the market might focus on. Chop and development. So because of the extent of this move, and if I'm right about the extent of sideways that we go through and reconsolidation and reaccumulation, something that moves for a period of months would not surprise me. Right? But you want to see some kind of strong base built, right? So maybe a period of 2 months, 3 months, a quarter. And I think that, you know, there'll be some signs across the market as whether or not there's still capital be deployed and how the ETF is trading. And I think that, you know, you're going to be really stupid if you don't get into Solana at that point, if things are looking good and Solana is consolidating around 80. And then that's close to 40% pullback. It looks good at that point. From a market structure standpoint, you know, if we look at just how this trend has behaved the entire time, you know, moving averages, always said 20-period moving average, great. Below the 20 period, we are below quarterly, monthly VWAP. So by all means, in terms of just local risk, we've lost it. If you look at this from a market structure standpoint, you know, we're now making a lower low, lower high, right? So things have arguably changed. And I think when they change for a little bit here. So hit the like button. Hope you guys enjoyed the stream. I think that more or less covers it. And I will see you next Sunday after the ETF. Be well, stay alive out there.